All right, welcome back, everybody. Welcome to today's live stream. My name is Light Chimiso, and you're welcome to Light Chat. So, in this channel, I'm all about simplifying your forex journey. So, last week we were supposed to have this class, but due to network issues, so we have postponed it till today. All right. So, with all that being said, let's move on to the business of today. So today we're going to be talking about identifying key levels. All right, identifying key levels. Yeah, I know that's the issue most beginner traders have. Trust me, I had the same issue identifying key levels. Right, drawing them correctly, marking them on the chart. I had that issue because when it comes to key levels, it's pretty simple, but it's not easy. Right, it's pretty simple, but if you're not careful, you might get yourself confused and stuff. So today we're going to be identifying key levels. I'm going to be showing you guys how to identify key levels, how to mark them out correctly, and how to know if the key levels are valid actually. So that's what we're going to be doing today. Trust me, I had the same issues. I understand. People are like, I don't know how to identify key levels. How do you do that? Plenty of questions, right? So today we're going to be answering those questions today. So before we dive into the business of today, right, as our custom is, I would love to know where you're streaming me from. Let me know where you're streaming me from. I'm currently at Jerry Port Harcourt. I would love to know. Drop in the chat box. Let me know where you're streaming me from. Before we move on to the business of today, let me know where you're streaming me from. I would love to know where you're streaming from. Drop in the chat box. Let me know where you're streaming. And I would love to know if you can hear me clearly. Okay, before we move on to the business of today, make sure you like this video and share to your WhatsApp status, your IG story, across all your social media so that it can be recommended to as many more people. All right, let me go ahead and share from my end, and then we'll come back and get on with the business of today. So let me go on and share, and then we'll come back and get on with the business of today. All right. And go on and share so you to do the same. So as well. Sorry. Okay, so I actually shared that on my story, right? So first off, last week class, okay, the previous class before we were having this one, we talked about candlesticks at key levels, right? And then I mentioned the different types of candlesticks, the examples of candlesticks, and we talked about a little about key levels and stuff. So, like we've always been saying, market structure tells us the direction of the market, key levels tells us the location, and candlesticks gives us confirmation. So that is it. So today we are going to be talking about identifying those key levels, so that we actually know the location on where price is really relevant on the charts, where we're going to be buying from, relevant place to buy from, best price to also sell from too as well. So that's what we're going to be looking at in today's class. So first off, right, we're going to be defining key levels, right? I know I've defined it in previous class, but for the sake of those guys joining us today I'm gonna be defining it again, right? So key level is an area where the market has tested multiple times in the past. It's just like an area on the chart where price has made noise, right? Got there, made noise, rejected, made noise, rejected, like that, and so on and so forth, right? So that's what key levels are. So I can see the numbers coming up a bit. I can see the numbers coming up. I can see the numbers coming up. So I would love to know where you're streaming me from. Those of you joining in now, I would love to know where you're streaming me from. Drop your locations in the chat box. Let me know where you're streaming me from. Actually, drop your locations in the chat box. So key level is an area where price has tested multiple times in the past on charts, right? That's what key levels are. So our job as traders is to spot these key levels and make informed trading decisions. Like I said, it tells us the location and where price is actually, relevant to actually trade for. So our job is to spot those levels and make decisions based off what we are seeing at those levels, right? Like remember, key levels is not just, it shouldn't just be, it shouldn't when you spot the key level, you shouldn't just trade blindly. That's why we have candlestick patterns, which we taught in the last class. Right? Candlestick pattern gives us the confirmation, why key level is just the location. So when you get there, you have to actually verify if that key level is actually worth your time and your money, right? When I mean your money, if you should be placing trades based off of that key level. So that's what we're going to be looking at for in today's class, right? That's what we're going to be looking at for in today's class. So first off, we're going to be talking about the importance of key levels, right? The importance of key levels. So now, number one importance of key level on my list, number one is once key levels are identified, it can serve as potential high-win rate opportunities. Like I said, key level tells us the location. So as traders, once you're able to identify that key level, we get to make informed trading decisions. And most of the times, it gives us high-win rate opportunity, right? So that's what key levels does. That's number one. And then number two importance of key level. Key level makes analysis easier, right? It makes our analysis easier. You don't have to sit on your screen watching the charts. You just mark your levels and then set alerts. Maybe you might not know what alerts are, but set alerts, and whenever price gets to those levels, you get to make trading decisions based off of that. So that is what key level is all about, the importance and definition. So now let's go to the charts. So I get to show us what I'm talking about. Now, I'm going to be sharing my screen pretty soon, and I would love to know if you can see my screen. Drop number one in the chat box. If you can see my screen, drop number one in the chat box. If you can see my screen, drop number one in the chat box. If you can see my screen, drop number one in the chat box. If you can see my screen, drop number one in the chat box. Let me know if you can see my screen. Let me know if you can see my screen. Let me know if you can see my screen. Okay, one. All right. Let me know if you can see my screen. Drop number one in the chat box if you can see my screen. Right. So let me use a chat that I've not, okay, let me see. Don't need to know that. Display before. Okay. Nice. Yeah. So this is the pair we are going to be using for all our examples because I've basically done nothing on this pair, and I'm just going to be marking out the levels that I see so that you guys get to understand the analogy behind key levels, right? So that's what this class is going to be all about. So this class is basically going to be all about practicals. All right. Number one. Okay. So moving on, right? I'm gonna be teaching you guys on the secret of key levels, right? Key levels, there are secrets to key levels. And once you can be able to understand the secret, trust me, marking out key levels on any chart, any currency pair, it's gonna be very, very simple. You can do it works on gold, works on USDJPY, works on GBP USD, works on any pair, NASDAQ, whatever you trade, works based on any of those pairs, right? So number one secret is multiple rejections. I've talked about rejections in the previous classes. Multiple rejections. That is number one secret we're going to be looking at. So when I mean by multiple rejections, right? Now, if you zoom out on this chart, you can see price came here, rejected, pushed up, came back here, rejected, pushed up. So you can confidently say this is a key level, right? You can mark extend it. This is a key level. So in the future, if price ever comes back here, we're gonna see reaction here, pushes up again. So that's just how key levels are. You just mark it and then wait for price to approach those levels and then make trading decisions. That's just how it is. That is number one, multiple rejection. Now, number two secret is price needs to move away aggressively from those levels, right? We need to see an aggressive movement away from those levels, like we can see right here. Now, let me stay in drawing mode. You can see price approached here, moved up aggressively. You can see this whole move pushed up aggressive. So this is a valid key level. Came back here, pushed up again aggressively. Another valid key level. Right? These are all key levels. Now, there's another key level I'm currently seeing right here. This is another key level. I'm going to be explaining why it's a key level. Now, you can see price came here, dropped, came here, and moved away aggressively again to the downside. So this is the key level. So in the near future, let me take a look at drawings so that you don't get confused, because people get confused when there's too many things on the chat. Okay. So in the near future, if price comes back here, does this, comes back here to react, and then we might either see one of two things, right? Either price drops or eventually breaks, bounce on top, and keep moving upwards. So that is just how price moves, right? Either it comes here and drops to the side, or it breaks it and continue moving higher. So this was what key level help us identify, right? Where price is actually relevant to actually make solid trading decisions from. So that is it. So if what I say makes sense to you, I want you to drop number two in the chat box. Drop number two in the chat box. Drop number two in the chat box. If what I'm saying makes sense to you so far, drop number two in the chat box. Drop number two in the chat box. Drop number two in the chat box. If what I've said so far makes sense to you, drop number two in the chat box. 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 Okay, number two. All right. Okay, so I guess it's making sense, right? Yeah, it's making sense. Okay, so moving on to the next secret of key levels, right? To the next secret of key levels. Now, key levels can act both as support and also as resistance. Like I've said in the past, support is like a floor. When price gets there, it bounces off. And then resistance is like a ceiling. Price gets there, it rejects, it drop. Now, based off of this example I've shown you guys, so this is support, right? Price got here, found support. Let me stay in dry mode. Found support, pushed up. Go here, met resistance, dropped. Go here, support again, and so on and so forth. Eventually, definitely get here, find another resistance, and drop. Find support, just like that, until one of these key levels are broken. Now, when I mean if price can act both as support and also as resistance, let me show you guys something. Let me see. Okay, so this is another key level, right? You can see price pulled away from this point down aggressively, came back here, dropped, came back here, dropped. So this is a key level, and mark it out. Now, this is what I mean by both support and resistance. Now, we can see clearly that price got here, dropped, all right, aggressively, came back here, dropped, met resistance. Now it broke above it. Now it has found support, rejected, rejected. Eventually, it's going to push up, come back here before dropping, or it might just break and keep pushing. I don't know. I don't know. I can't predict. Our job as traders is just to wait for market to act, and then we react. We don't predict. Now market has broken above it. So at this point it has found support, and what's likely next to happen when the market opens, the price pushes upwards up until this point before it either drops or it either breaks. So that is just how price moves based off of key levels. So this is how you identify your value key levels. Number one, price you should see price move aggressively from that point, right? You should see price move aggressively from that point. That is number one. And then number four, the levels must be close to the current market price, right? The level must be close to the current market price. Now, what do I mean by that? Now you can see this is the current market price at zero. You can see 0.59970. Now you can see this level is very close to it, right? So this is a valid level. You can see this other level, it's still close to it. So it's this one that is just apart from the market price. So we don't need to make decision based off of this unless price gets here. So the level we are supposed to be paying attention to is this level and this level, right? These are the two levels because they are close to the current market price. So that is it. These are the secret identifying key level. Pretty simple, pretty straightforward, just like that. Now let's do another pair, like let's say AUTJPY. Let's see if we can mark our key levels right there. Pretty simple. Now you can see right here, price dropped aggressively. So this is a key level. This is a key level. And all we do is just wait for price to get here and then make trading decision. This is another key level. You can see price has rejected from here multiple times. So it meets our criteria. One, aggressive, pull away from the key level, and multiple rejection, drop, rejected, came back here, rejected, came back here, rejected, just like that. So these are key levels. These are key resistance levels, right? Now on the support side of things, right? On the support side of things, you can see price rejected from here, rejected, rejected, rejected. So we mark our key levels. Now you can see these key levels. At some point, price is overlapping, right? It's overlapping the key level. You can see some points are not touching it properly. It's because key level is treated as a general area, a general zone, not just a single line or just square box. Some people extend their joint like this. Well, I don't like that. I love keeping it like this so my chart looks clean. Right? I don't want to confuse myself with so many things on my screen. Right. So that is how we identify key level. Let's do a little more example. Let's say which other pair? Okay. USD, USD, okay, NCT, okay, Euro USD. So power is out, and don't worry, power will be coming up very soon, right? So just focus on the charts, right? So this is on Euro USD, right? This is on Euro USD. This is on Euro USD. Now, how do we mark our key levels? You can see a drastic pullback. So we mark this point. You can see now market has come back here. Now market came back here. What are we expecting? A drop, right? Because it came here, pulled away aggressively. Now it's back here and it's going to pull down same way aggressively because this is a key resistance level. This is a key resistance level. So that is just it. And on the support side of things, now let's look for a key support level. Rejection, rejection, rejection. So this is a key support right here. You can see it's right here. So whenever price comes back here, whenever price comes back to this level, it's likely to make noise. either rejects, push back up, or it breaks it and then drops completely. So that is how price move. That is how price move day in day out. That is how price move. And then that takes us to the next point: ways to trade key levels. Right? Ways to trade key levels. If what I've been saying so far makes sense to you, I would love you to drop number three in the comment in the chat box. Drop number three in the chat box. Drop number three in the chat box. What I'm saying so far makes sense to you. Before we move on, drop number three in the chat box. Drop number three in the chat box. Drop number three in the chat box. What I've said so far makes sense to you. Drop number three in the chat box. Drop number three in the chat box. Drop number three in the chat box. What I've said so far makes sense to you. Okay. Number three. Number three. Number three. Okay. Okay. So far it's making sense to few persons. All right. So now moving on to ways to trade key levels, right? Now we have just two ways to trade key levels. And the first way is retest pattern, like I've been explaining right here. Let's go to the chart. Number one is retest pattern. Now you can see right here, price gets here, drops. Now it goes here again. Now, if you can remember from last class, we talked about M pattern. Now, this is a valid M pattern I'm currently seeing here. Came here, give us an M, right? Candlestick formed an N. So this is an M. So now what are we looking for? All we're going to be looking at is just selling. So stop loss somewhere around here, right? And take profit somewhere around this level because we're not predicting, we're not putting it below this level because market can come back here. Reason being, market can come back here and reverse. I keep and continue going upwards, probably break this level, or I get here and further drop. But we don't want to predict. All we want to do is wait for market to act and then we react. So now market has reacted here, giving us M pattern. So it's safe to the market was to be open to sell from here and expect price to come down. So that is number one way. And then number two way, let's go back to NCD. NCD USD. NCD USD. Now you can see now this is a break. Number two way to trade key level is the break retest, right? The break retest. This is number two way to trade key level. The break retest. Now go back to the chart. You can see on NZD USD, this is what happened. Broke it here, rejected, dropped, right? Now it broke it and it's retesting, rejecting, conjecture, saying buyers are actually stepping in to protect this level, giving price support. And very soon, what we're going to see is price burst upwards. So the safe thing to do here, right here, is to buy, right? Is to buy your stop loss below here, slightly below the zone, and your target, this previous key level right here. So that's just it. That's how we get to make trading decisions. But it doesn't work all the time, right? Because market is very dynamic, right? It doesn't work all the time, but most of the times this is what happens. Because if I buy from here, what happens next? Price just comes, take it out, and then keep dropping. And you'll be like, oh, it has reacted here, it's supposed to go. But market had other intention. So you suck it up and move on. You don't have to cry about it. Suck it up and move on. So that's how we get to trade day in, day out. Or most likely it reacts and pushes up. You make money. That is it. If it doesn't, it drops, it hits your stop loss. That is it. Fine, you lose, you move on. Life goes on. That's how it is. So now, those are the two ways to trade key levels, right? Rejection. Talk about retest pattern, it gets the key level and then it drops, gives us candlestick confirmation. I talked about candlesticks last class. So it gives us some candlestick patterns like the M pattern on a resistance level or the W pattern on a support level. Like you can see on USDJP on NZD USD, this is like a W pattern, not like a perfect W, but it's more like a W. let's see, go to the 1 hour, let's see. Okay, no. So this is like a W, right? So you can see it's a W, just like a W, and then market comes back with the test before pushing it. So that's just how it is. That is just how it is. On the other pair, we saw it was an M pattern on the resistance, and we can see clearly right here. This is an M pattern too as well. Price got here, give us this M pattern on this level, and then drops. That is just how it is. And came back here, gave us a W pattern, pushed up. You can see it. And show the W pattern. So let me see it. You can see it's not perfectly W, and from to pull out the stuff. You can see this looks like a W. It's very much like a W. So that set patterns we're looking for at these key levels. Right, key levels on their own means nothing, but candlestick gives us confirmation, like I've always been saying. So that is it. That is it. If what I've said makes sense to you, drop number 4 in the chat box. Drop number 4 in the chat box. What I'm saying so far makes sense to you. Drop number 4 in the chat box. What I've said so far makes sense to you. Drop number 4 in the chat box. All right. Drop number 4 in the chat box. Drop number 4 in the chat box. What I've said so far makes sense to you. Drop number 4. Drop number 4. All right. Okay. Okay. 4, 4, 4. All right. It's making sense. All right. So moving on to the next point, right? Moving on to the next point. So the next we are going to be looking at are types of key levels. We already know that, right? We have different types of key levels, and I've talked about that previously in the previous session. So I'm not going to be going much in depth on it. Just going to be, talking a little about it. So in types of key levels, we have different types of key levels. We have support and resistance, one I'm basically explaining, and psychological levels. Right now, what are psychological levels? Psychological levels are round of numbers that the banks pay attention to, right? Like 5, 10, 15, 20, 25, 30, 35, just like that. So the difference between the psychological levels to the next psychological level is 50 pips. I've explained that in the previous class. I'm not going to be going much in depth on it, but it's just going to slow me down. So now, if I want to plot the psychological level, how do I plot psychological levels? I plot psychological levels relevant to the current market price. Now, currently we are at 0.59970. Next, round of number will be 0.06, right? Now, set it because we can actually get it correctly. 0.06000. Okay, you can see it. This is the next psychological level. And then the next psychological level we're going to be looking at. Now, if you actually don't know how to calculate it, you can pick your, measuring tool, trading view, and just calculate 50 pips. 50 pips to the upside. Sorry. This is actually slow, but I guess because of the 50 pips. And you can see it's right here showing 50.00, and the next one is 0.650. So this is the next relevant figure bank to actually pay attention to. I think I got it right there. Okay, 0.60500. So that is it. Now you can see from distance from here to here is actually 50 pips. So these are psychological level because banks they'll pay attention to this because these are numbers easy to remember. Like you go to buy something like a phone and someone tells you this phone is sold for 100,000 naira. You won't start pricing from 100,000. You start pricing from 99,673 naira because it doesn't just make sense. You start pricing from 95,000, 95,500, 96,500 because these are round off numbers, yeah, and it actually makes sense. Not 96,723 naira. You're pricing something. Who makes now? Even look at you. Who is this person? I trust my Nigerian traders. So look at you. Who is this person? Who is this person? What are you saying? So that is it, right? So that is it. That's how psychological levels. And let's go to let's say the XAUSD, XAUSD, that's the score. Now, psychological levels. Now, what's the current market price? Current market price is about 5,200. So the next psychological level will be 5,300. 300. So you can plot as many as you like. But I don't basically plot psychological levels again because I just use my head to like know where price is currently at. It's just a waste of time. But for ease of, you know, next one is 5,250. It's 250. That is all. If you calculate it with our measuring tool right here, 650 pips. Close to 50. Close to 50 pips. Wait, let me see properly. Let me see. Okay, yes. Okay, yeah, 50. Let's see, 50.50. So the next one, 5,250. Next one will be 5,200. It's a digit. And if you pay attention, you see that price is actually reacting on those levels, on these levels. Right? You can see price go here, react. Next one is 5,150. So these are just round up numbers, like I said, 10, 15, 20, just like that. You're just adding 50 on top of it. 50 works on any pair, because this is basically market, psychology. This is how traders think, because the market is filled with different traders and people will only think this way because this is how people think. Even your normal day-to-day purchase, this is how you think. You don't price from random you don't price from random numbers, you price from numbers that you can actually pay attention to. Next one is gonna be 5,100, just like that. Just like that. You can see it reacted on 5,100, pushed up, got here, dropped, reacted again, pushed up. So probably what move psychological level to psychological level. Reacted here, pushed up, came here, reacted, pushed up, reacted here, dropped a little, pushed up. So these are price moves. Pay attention to these levels, right? So next class, I'm going to be teaching you guys how to combine key levels and how to combine support and resistance and psychological levels. And the next thing we're going to be talking about is common mistakes to avoid, right? Common mistakes to avoid when marking out key levels. Now, number one common mistake is drawing too many levels. These are what beginners do. They draw too many levels. Like, oh, let's go back to NTT USA. NTT USA. Oh, this is what it is. Let me clear up the stuff. They don't know value key levels, right? They don't know the criteria that makes key levels. See what they now do. They now come here, rejection. Okay, this is another key level. Start drawing so many key levels. Now be like, okay, it rejects here too. They'll draw so many key levels. They'll draw another one right here again. So this is a key level. They'll come back here. Price came here. Okay, another key level. And at the end of the day, your chart is so messy. They don't even understand what you're doing. You can see, you'll be like, okay, here it dropped again. Okay, key level. At the end of the day, they don't even know where to like actually position themselves to like make valid trading decisions from. Okay, like you rejected. Oh, very good. Their mind, they're trying what's correct, key level again. So all these things, you don't basically have to do all these things. All you have to do is focus on the one that's actually relevant to the current market price. Like I've told you guys, make sure it's actually relevant to the current market price. You can see this is market price. You look for key level around that area, relevant to it. Like this one and this one. This one is not too relevant, but at least it's still close to a bit close. But this one and this one are the closest to the current market price. So these are what you look out for. And the secret, aggressive, pull away from the key level, like from here, pull aggressively, from here, pull aggressively, here, pull away. So these are what you should be looking out for on these key levels. So number two mistake beginners make is number two, they are forcing levels to fit their buyers. This is what they like to forcing levels to fit their buyers. Now, currently here now, let me take away this level. Now you can see price, rejected and dropped. Now what they do is they'll not drag this one. So like to make sure that they'll make sure they'll actually lie to themselves that okay, price has actually touched this key level here. So what they now do, so they sell from here, they take profits here. And eventually, this is not the actual key, this is not the actually price now comes back into this, comes back, hits their stop loss, touch the key level actually, and then before it starts dropping, and they'll be like, oh, Forex is a scam. This one's a scam. See, you just came to take my stop loss before dropping. But lack of knowledge, keep making stupid ass mistakes. So they actually forcing the key levels to fit their buyers. Like right here now, right here, they can tell themselves that okay, price drop. From here, they not be like, okay, they drag this key level, they drag it to this point. And maybe if they actually did, they actually got lucky because price pushed up. But trust me, eventually price is going to come down and sweep this level. Price is going to come down and sweep this level. So you don't force key levels. It actually, if it doesn't react on the key level, just leave it be. Leave it be. I learned that the hard way. If it doesn't react here, leave it be. Now, if I was present currently and price did this, pushed up, dropped, came here and pushed up again, I wouldn't have done anything because it didn't get to my point of interest, which is the skill level. And even price got here, okay, it's valid. I'll be like, okay, this trade is valid. Let me get it. But since it stops here before reversing, I'm doing nothing. I'm just gonna sit out. That's the problem with beginners. They don't want to sit out. They don't want to they just keep rushing things, rushing life, and they want to make money, they want to make money. And then at the end of the day, it doesn't work out for them and they start bashing everybody. Forex is scam, this one is this one is that, this one, all those money is a lie, it's not from Forex, they're stealing it, all those kind of bullshit talks. So that is it. And then number three is ignoring higher time frame structure. Like I've told us, higher time frame tells us the direction of the market, right? Market structure it tells us the direction of where price is actually going. So now, what do? You come to the 4 hour time frame. Come to the 4 hour time frame. Now, all you can see is price has been pushing upwards, right? Forget what is happening right here. Price is bullish, right, on the 4 hour time frame. Come to the 1 hour. What's happening on the 1 hour? The current time frame. Let's see the current market trend. You can see it's an uptrend. Came here, rejected. It's like, okay, this is a key level. You can see because it has aggressive pull away from this level. So you can see price has gotten to this level, and that's why you are experiencing some upward momentum, and very soon you see price push up back up to this level. So now the draw levels ignoring the higher time frame market structure. Now, first of you draw a level on the higher time frame before you coming down to smaller time frame like the 15 minutes to draw levels that you can make decisions off of. Now, this is it. This is what they miss. They just come here, wake up, come to 15 minutes time frame and draw levels. And before you know, market is actually trending upwards. And what they want to do, they want to be selling. They want to be selling. Tell themselves that okay, this is the main key level, extend it like this. They want to sell. And markets will eventually take out their stop loss and they lose money. And then they start complaining. Start complaining. So that is just it. So you have to actually to where the market structure is. Where is the bias of the market? Sorry, I think a call came in. I'm going long on gold. Going long on gold. Anyway, so we're not here to talk about analysis or direction. Going long on good. So ignoring higher time frame structure. So they ignore all these things and then they just plot key levels on smaller time frame, and that is wrong. And then the fourth one is entering blindly at key levels. Like I've always said, candlestick gives us confirmation on where it's actually happening, right? Key level tells us the location, candlestick gives us the confirmation. Like right here now, let's go to the smaller time frame. Get rid of this one. So some people just enter blindly. Like anyone would like extend this thing like this now, forcing it. You're entering blindly without proper knowledge, right? And this one right here, yeah. Some people might enter blind. Now, some people now might don't wait for a retest whenever price breaks this. They say, oh, it has broken it. It's time to fly. It's time for price to fly. Before you know, they start buying from this point. When they buy from this point now, the moment it breaks it, they'll not put their because they don't know how to even set stop loss here. That's another one. They'll not put their stop loss here. And if you zoom in, you can actually see that price came back to stop loss. All those people that rushed and bought, price came back to hit their stop loss. And now you can see store the beats we tested. Like I said, break. So this is the break and retest. You don't want to get in on the break. You want to get in on the retest. That's touched here, give you a confirmation that it's going to be going up. So currently, you're not entering blindly. If anyone asks why you buying currently, you tell them that price broke here, retested, means buyers are protecting here, giving price support for price to fly high. So that's just it. You don't enter blindly. You don't enter blindly. And then if you go to Euro USD, I think I saw something similar on Euro USD. Okay, like this M pattern currently. Don't just enter blindly because some people might be like, okay, price got here, rejected, that's dropped to this point. Let me sell. They sell from here with stop loss here. Now, if you extend this thing, you can see that price did this. So price did came back from here. It didn't even push down. It came back, hits their stop loss because they don't even know how to set stop loss. And then it comes back down, comes back down. And before price push down aggressively. So you don't have to enter blindly. Wait for candlestick confirmation, right? Candlestick confirmation, doji, all those chart patterns. Wait for those confirmations, and then before you make trading decisions, right? So that is all. That is all. So that is all. That is all. So currently, come to the end of today's class, and if you have a question, if you have a question, I'd love you to let me know if you have a question. Let me know if you have a question. Let me know if you have a question. I don't think there's no question. If you have a question, just let me know. 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 I think this is time for questions and answer. If you have a question, just do let me know. Do let me know. So let me know if you have any question. Let me know. Let me know. Let me know. Okay, I think I'm seeing a question. Someone said, okay, how do you spot key levels properly on live chat? Like, how do you know it's going to be a potential key level? How do I know it's going to be a potential key level? I don't know. Let me see. I think I understand what this person is trying to say. So currently, let's say this is where we are currently. How do I know it's going to be a potential key level, right? Now, now let's say price hasn't gotten to this point. Price hasn't gotten to this key level, right? Now, I see this peak right here, and price drops aggressively. I'm just going to mark it, whether price has gotten to it or not. I'm just going to mark it because I know that it meets the criteria for it meets my criteria when I'm drawing key level because there's an aggressive pull away from the key level from this point. Just drops, giving me lower high. So I know that whenever price comes here, there's going to be a reaction. Whether I like it or not, whenever price gets here, there's going to be a reaction. Whenever price gets here, there's going to be a reaction. So that is, I just mark it out because I know that there's an aggressive push away from it, and you can see price eventually go here and reject it. So by the time market opens a few hours from now, you see it's gonna drop. It's drop to the downside, come back here, either break it or actually push up. So I don't know. So that is it. That is it. So I guess that is all the questions for today, right? I guess that is all the questions for today. Okay, that is all the questions. All right. So just a little recap on what we've talked about today. We define what key levels are. Talked about the importance of key levels. And we say once key levels are identified, it gives us high win rate opportunities, and then it makes our analysis easier because we don't have to sit on the charts 247 waiting for price to waiting for price to give us. We just mark those levels and then we go out, right? And then come back later and check out if price has gotten to those levels. So check it from time to time. But trading view has actually made it a lot more easier, right? You can set alerts now and then it just sends a notification. Right? For those of you using trading view, you can set an alert. I think on text on computer, you just have to alternate A and then create an alert for you. And then you can create it and adjust it as you like. Adjust it. So whenever price gets to this line, it tells you, sends you a notification, it starts beeping that price has gotten there or time to make trading decision. You can set it here. So that is it. And that is one way to set it. Another way to set your alert is you right click and you see add alerts on USDJPY. There is always you shortcut alternate A. So that is another way to do it. Or you click this alert icon right here and then you set the price. Create see, set an alert for your current market price and then you can use your hand to like extend it. So you don't just basically have to like sit all you just do is mark your levels, set your alerts there, and then walk away. Whenever price gets there, it's definitely going to send you a notification that price is currently there. It's time to make trading decisions. So that's how simple it has become for us. Very, very pretty simple and straightforward. Someone said, please, are there any other materials you can recommend so we used to sharpen our knowledge on key levels? Yeah, there are lots of content, free content online. But the thing is, you don't just have to complicate yourself. All you can do is just go on YouTube, search support and resistance. There are different contents from different profitable traders, from different people. So just go watch those videos like from the likes of Jeff Benson, Harvey, those guys who have been ahead of us. They've actually made content on all this stuff. So you just go search it, watch out. Because I can't basically teach you guys everything. Nobody actually taught me this. It's just my own personal research and that actually brought me to this level where I'm at to actually even teach you. So you can't wait for someone to teach you everything. Now I've given you a foundation. Now from what you've learned here, just take it out. Go and make your own research, candlestick confirmation, this. So actually do I actually learn was whenever I because back then I was reading trading books. So whenever I see this book, whenever I read the book and I feel like support and resistance in the book, I feel like support and resistance, I go to the web, I start support and resistance, and then I see what support and resistance are. From there, in this process of searching for support and resistance, I then learn all that stuff. But that is very complicated because you just you complicate this will be contradicting this. But at the end of the day, right, everything actually made sense to me because the more I learned up, the more I'm trying to learn about this one, the more I'm finding out something different to learn. So there was actually no structure for me. So currently I'm actually giving you guys structure right now. I'm actually giving you guys structure. So I'm actually taught you identifying key levels. All you just gotta do is just go on YouTube. How to identify key levels. You see different contents there that will actually even sharpen your brain. So it's easier for you. Because if you wait, I might not touch every little detail that will actually help you. So that is it. That is it. That is it. So just go on YouTube and search. Yeah, I think YouTube is actually the best place for you to, you know. And then also, I recommend last class I recommended an app, right, rather, for candlesticks patterns and chart patterns. Actually, I think is JCP on Play Store or Apple Store. I think Japanese candlestick patterns. I think so. Just go and search. I think it's black. Japanese candlestick patterns on Apple Store or Play Store. It's there. So that actually helped me understand candlesticks and all the patterns there is. But there are so many different candlestick and chart patterns. There are hundreds of them, but actually pay attention to few of them. I think just two or three, and I mentioned them in the last class, which is the W pattern, the double top, and the double bottom. The W pattern, also known as the double bottom, or the M pattern, also known as the double top. So those are key candlestick chart patterns I pay attention to, and head and shoulder. Those are the ones I pay attention to because they form rapidly on the chart. Times and times you count on that. And then there are some other chart patterns like flag, pop, copper handle, different falling wedge, rising wedge, all those different stuff. But you don't basically need all those things. You need like two, three. They're actually, you know, consistent on the charts, right? To actually help you make money. You don't need all those things. You don't need to complicate things for yourself. So that is all. That is all. That is all. So any other question? I don't think there's any other question. If you have any other question, do well to drop it. And I think we just have like roughly 8 more minutes. I think we have like 8 more minutes. Roughly 8 more minutes before we call it a day. So, and then back to the recap. And then I mentioned the secrets of key levels, and I said multiple rejections, and the price needs to move away aggressively from the point where from the peak, right? If it goes up and then drops aggressively, or it comes down and then pushes up aggressively, that's a key level for you. Even if price has not gotten there multiple times, right? Because even if price has not gotten there multiple times, it just drops, gives you a peak, and then pushes up aggressively. You should just mark that zone out because whenever price gets there, it's always going to react. Buyers will step in and traders will just step in to make trading decisions off of these levels. So that's just and then next point I also talked about I said key levels can act as both support and resistance. Whenever I break a key level, okay, let me show some example. Let me draw something on the chart so that we get to understand. So let's say price did this, pushes up, drops aggressively. Now let's say this is the current market chart, right? Price currently here. Now what do we do? Mark out this point and leave it because price has not gotten here. Now, eventually, subsequently, in the future, price do this push up. It might be slow, might be fast. Get here. The moment it gets here, it drops. Let's say it goes on an M pattern, it drops. Now, whenever we see the M pattern, we know that okay, price is really time to drop. Drops again. Now, the moment it drops again, it comes back here to meet this other key level here because price pushed up aggressively. So these are price moves. Comes back here, and then from here bounces off, right? Let me know if you can see my screen. All right, I think you guys can see my screen. So price bounces off from here, gets back here, drops again, drops, come back here, break, retest it, continue. That is how it is. That's how price moves. Or you might come back here for the second time. Let me delete this. That is one. That is the break and retest I'm talking about. Or you might come back here, after checks here, come back here, does this, drops a little, and then eventually breaks it. Once it breaks, we test, pushes up. That's how price move. So this is break and retest, and this is retest. Just retest, 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 retest. Break, retest, push. So now right here is using that ceiling. It gets to the ceiling, it drops, get back to the floor, bounces up, get to the ceiling, drops, get back to the floor. So key levels with multiple rejections are actually stronger. Right? Whenever I see a key level, like this one, rejected here, dropped, rejected here, dropped. So whenever I get here again, all you should be expecting is that price rejects and drop again. It's somewhere here. So that's how it is. Key levels are actually stronger, but the more it tests on this key level, the weaker it becomes, right? Because at first, when it got here, it dropped. It got here, it weakened it a little, came back here, weakened it a little, dropped again, come back, weakened it a little. Eventually, it just keep before you know it, break it. That's how price. Then once it breaks, it retests. You actually retest. After retesting, you can see buyers will step in and push price upwards. That's just how price moves. That's just how price moves. Day out. That is how price moves day in, day out. So I guess that is gonna be the end of today's class. Hopefully see you guys next week. Same time, same place. And always remember today is a new day to become a better you. So bye guys. See you next trading session.